Hello, everybody. It's Tortoise Investing. It is Friday. Fridays are portfolio update days. If you are new, please hit that like and subscribe button. I greatly appreciate it. Sitting at 128 subs, and we're climbing ever so slowly every day, which I love to see. And comment down below. It can be anything. Say hi. Let me know what you've been buying. Have any questions? I respond to every single comment. So, without further ado, let's jump into the portfolio. So, this is what we are rocking with. These are our current holdings. Things have been going pretty good. For the day, we are up 0.37. The S&P 500 is down 0.27. For the week, we are up 0.3. For the week, the S&P 500 is down 0.42. And we are catching up for the year-to-date. Year-to-date, S&P 500 is up 667. Year-to-date, we're setting at 4.92. So at one point, we were down over 3%. We're climbing back. There's been some red days, and we've been doing a lot better on red days. I think this is a good setup. I really do think that this is a good setup. You don't have to have a lot of holdings. You can have a few really good ones, and I feel like I have managed to do that. Now, we are a little bit heavy on the yield side, 2.455%. But like I said, I like what I've got going on here. I like how things are looking. 5-year dividend growth rate for the portfolio is 11.23%. Again, I like it. Above 10% growth and above 2% yield was what I was wanting. I mean, I'll take a higher yield. Why not? More that I get back that I can just reinvest into things. But yeah, so one of my first holdings here is Vici Properties. It is a REIT, 5.33% free cash flow yield, 4.52% dividend yield. This has been hovering above 32 since I bought into it. I've not really had an opportunity to really add too much more to my position, but it is probably one of the best REITs out there in my eyes. This and AMT, I absolutely adore these. I know the portfolio is a little heavy in the REIT department. I think I got 18%, but I don't mind it. I really like the holdings. I really do. And I love Vici. Vici Properties is something I feel is going to continue growing because the way they have their rent laid out is they have incremental hikes to take care of inflation written into their agreements. So very nice. Next up, Procter & Gamble. We all know Procter & Gamble, 3.91% free cash flow yield. You got 2.62% dividend yield and a payout ratio below 65%. Love it. And again, if you have any products in your house, you probably have something from Procter & Gamble. Net income been growing. EPS is going up. Their debt is slowly falling. It's not an issue. They have over $21 billion in EBITDA. Their debt is $22.6 billion, so not an issue there. Dividend growth is there. Share buybacks, they are buying them back pretty aggressively the last couple of years. And return on capital employed has been about 20% the past 3 years. So you definitely like to see it. The company's going in the right direction. Next up, McDonald's. I love McDonald's. I love the holding. I love the stock. Everything about it just ticks in the right direction for me. 2.93% free cash flow yield. Revenue, it's pretty even. I mean, it goes up and down. But the thing that you really want to focus on, yeah, the revenue's there, but the EBITDA is slowly growing. The cash flow is growing. Net income is growing. EPS is growing. They have debt, but it is manageable. They have 30.9 billion in debt. They have 12 billion in EBITDA. So again, my ratio that I like to keep this at is around 3. This definitely falls into that category. The dividend growth, it's around 10%. Again, I like that. I like that a lot. Share buybacks, they're buying back their shares. Return on capital employed is reliably above 20. So very, very nice. Again, a very good, strong defensive holding in my portfolio. Next up is automatic data processing. So I got into this around 225, and the financial sheet with this company I absolutely love. It is so good, so good. Free cash flow yield 3.09%. We got a dividend yield 2.20%. Payout ratio 58% below 65. Very nice. Revenue's growing. EBITDA is growing. Free cash flow is growing. Net income, EPS, everything is just ticking in the right direction. They do have debt. They have they're right at $3 billion in debt. Their EBITDA is over $4.4 billion. Not an issue there whatsoever. They do have good dividend growth. If I remember correctly, I think the dividend growth of this company is like 14% over the last 5 years. Very nice, very nice. This little, from 2020, this little boop there, a lot of companies had to do that. A lot of companies had to slow things down a little bit after 2020, but I think they're more than back on track. Share buybacks are occurring. Payout ratio, the return on capital employed is hovering around 30%. Very nice. I think this is another really strong company, and any dips with this is a buying opportunity in my eyes. Next up is Johnson & Johnson. Love it. You got to know what, if you are a dividend investor, you know what Johnson & Johnson is. 4.10 free cash flow yield. They got a 2.84 dividend yield, payout ratio at 66%. A little bit high, but not too bad. Again, I like to see this around 65. Revenue is growing. EBITDA, free cash flow yield, they are flooded with the cash. Net income is going up. EPS is going up. They have debt, but it is absolutely manageable. $26.8 billion in debt. Their EBITDA was $28.9 billion, so easily cover that. Their dividend is increasing. I think it's around 6 to 7% over the last 5 years, so beating inflation. And return on capital employed is growing, and it's been reliably above 15%. So another really strong defensive holding. I know they had a lot of suit information and some legality issues, which caused this dip, this 10% dip. But I looked at that as a buying opportunity. I think I got in at 161, and then I dipped my toes in a little bit more when it hit 159. But yeah, another really, really good holding that I like a lot. And lastly in our portfolio is American Tower Corp. American Tower Corp is a REIT for cell towers. They have free cash flow yield of 1.55%, dividend yield of 2.9%, and payout ratios with REITs, you don't really pay that too much attention because it is FFO. It is not the actual payout ratio. But revenue going up, EBITDA is going up. They got a good bit of free cash going on. Net income, EPS, debt. Again, with REITs, this is usually going to be higher, as well as shares outstanding. But the thing I absolutely love with this company is American Tower Corp increases their dividend every quarter. That is ridiculous, and they've been doing it for the past 12 years. And their growth rate, on average, I think is 14 to 16% dividend growth year over year. Absolutely bonkers. And I like it. I really like my portfolio right now. I like how things are looking. I feel like I'm defensive with growth. We have a good green day. I'm going to get it with VOO. We have a tough day where the market's down a little bit. I feel like my defensive holdings I've got are going to carry me. So I think I may outperform on the green days, and I may outperform on the red days, because I have been doing both. I think the last little bit I've been either cut even or a little bit better on each green day, and every red day I've been killing it. Like I said, up 0.37% today, and SP 500 is down 0.27. So yeah, I hope you enjoy this little look at the portfolio. Again, if you have any questions or anything, let me know down below. And I hope everyone has a great weekend. See yous.